Silver prices are up 2%. Gold prices are bouncing off 5-month lows. We have platinum prices that are up 2.3%. Palladium prices are up 3%. And we also have oil prices that have broken down over 500 points in the last week. Exactly as we talked you through last week, look for sell short opportunities here on Brent crude oil, which is now being rugged over the last few sessions, breaking all the way down over 4% in the last 3 trading sessions, which again, this has provided you a lovely opportunity to capitalize on the constant ebb and flow that we are seeing with oil, which again comes down to our main point that commodities, they are not a buy and hold market. You want to buy low, sell high, and rinse and repeat this whole process. This is how you're going to crush it in 2023. So with that, we discussed at the start of the week where hedge funds and money managers, those that have a position on oil, we currently have 84% that are currently long on oil after the breakout that we had last week back towards the swing high. So what happened? Many traders, they FOMO'd, they used momentum-based strategies, ended up buying right at the top. What happens? Oil gets rugged, breaks down 500 points in a week, which puts us nicely in profit on all of our sell shorts there on crude oil, which has worked out perfectly within the strategy that we discussed with you to be selling oil over the last week. Now, alongside that, I currently see opportunities across the metals here. So obviously right now we have metals that are starting to surge on the day. Now this comes as a result of the price action we've seen over the last couple of sessions. The dollar broke out to the 2-month highs. Treasury yields are broken out towards the highest level in 15 years. Risk off across the markets, which again offers fantastic opportunities to sniper in at lower prices. We've had a break back down towards the swing lows here on multiple metals over the last week. Everything from gold to silver to platinum to palladium, even copper as well. The price action that we've seen as a result of all the negative data out of China this week has meant that you've got much better prices to sniper in, accumulate at lower prices to take advantage of the typical risk on move that you get in the final couple of weeks of August leading into September. As you know, next week we've got the Jackson Hole Symposium, which is notorious for the Fed to drop hints regarding what they're going to do at the September FOMC statement. This again can often create a bid for metals in the last week of August. And alongside that, over Tuesday, Wednesday and Thursday next week, we have the BRICS Summit, where they are scheduled to discuss the prospect of a gold-backed digital currency. And already we're seeing this news item start to generate some momentum here. We've witnessed countries in South America in the last week, like Argentina, have a significant devaluation of their currency, an 18% move lower in purchasing power with that currency. And of course, this sets up perfectly going into next week for a summit to discuss the prospect of BRICS nations launching a gold-backed digital currency. So it's definitely something just to have on your radar as we head into next week. There are some very specific cycles to capitalize here from a capital flow point of view in the last couple of weeks of August. Then as we transitioned into September, completely different cycle. It's going to be the last month of the quarter, which is often typically much more risk off. You want to benefit off the back of that with positions, for example, along the dollar, and looking for sell short opportunities yet again on multiple commodities, such as we've just benefited from in the last week with oil breaking down 500 points just in the last week. If you go back, watch our reports last week, what did we state with you? We are selling Brent crude oil. All of that has played out. Oil has tanked. So again, this comes down to utilizing data, statistics, market intelligence. You really need to be on top of the cycles for each commodity, understand the capital flows in the market, of course, understand the fundamentals, the macros, the narratives, the key areas of liquidity so that you can get your sniper entries on either buying from the swing lows or selling from the swing highs to really time your entries with precision. That will help you massively when it comes to banking your trades as well. Now, further compound this with the intermarket correlations, the ratios in the market, and then finally how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.